Welcome to TradeTheNBI.com. This is John. This report is for the 8th of November. And, we saw the crossover here. It's kind of that relaxed because we were expecting a little bit of softness, even though we had the rising shakeout, fine. That steel crossing below cyan usually is a weak point. And then when you compound it with midterm buyers also crossing below the longer term, you tend to get a little bit more weakness now. This isn't bad because we still ended up moving to the highs and it kind of stayed flat for the most part and stayed within the range, which was pretty darn good. You can see from extreme, we're just at the yellows. We were looking at seeing a red, but enough new money came in to hold things on. Now the question is, if this is just all the new money that's holding it in place, what happens is that dries out. We can see that shorts now moved above the zero here in the cyan. And it's not going to take much for them to break, and you can also see orange skyrocketing. So you're not getting that power reset of orange stepping down like you did down here for the last breakout and that. So it's just worth pointing it out so that there's not an expectation that there's going to be some dramatic upside push at this particular point. Likewise, NASDAQ softening there, getting into pretty extreme levels here with the warning line. Well over 16 on the shakeout. Anything over 15, we tend to be like a little more cautious, but usually you get those little runaway extensions on that, and that's where the ABM comes in real handy. But it looks identical here with the DOC, and I think that's an important one to pay attention to, that we've got a matching, at least from an algo standpoint, of what is going on, even if it may be slight fluctuations in price or whatever. You're right along our midpoint line there, the 115.5 range, holds on just above it, and stabilizing it would appear. This becomes a baseline, but a break of the zone, and I think that we head down into the 110 range, and that would be quite a change, and I think put a lot of pressure on the S&P. Just a crazy run here, TLT, the flight to safety. It's just a huge move for no real reason. It's unlikely that rates are going to improve as far as going down, but that seems to be what you're seeing priced into the situation, which is very strange. And look at our friend oil. Look at that. It's just skyrocketing, and that is a huge unknown, because that will have an impact on inflation. Even if it doesn't slow things down, it's an indication that there's going to be some narrowing in supply. I think it still bodes well that you've got an economy that's starting to pick up steam, and it's one of those things where it feeds upon itself. If it actually gets going above 3% or so, you could have some spurts that take it even further, and that just depends on a lot of the little factors. I think tax reform helps the market more than it really is going to impact short-term economic growth. I think the optimism that exists and the pro-business environment has certainly created much more of an impact than anything else. Because look at, even without Obamacare repeal or anything like that, things are still moving along. And gold still not able to get out of it. We didn't expect that it would. It had a little reset, but it wasn't enough to do anything. We still don't even have positive shakeout. It's going to take before that happens. And I think the first real surprises will be if oil maintains where it's at. We may actually get in the beginning part of next year the earliest signs that it's having some inflationary pressure. So you can see this is what people would call a classic little mini double top intraday. And sure enough, the second one produced the actual pop above the 13 here, and we retraced, couldn't even get back. Well, it got right to the 50%, rejected right off that, and that caused new lows. And so that's exactly what we've gotten. You did the exact same thing twice, and then made new lows. So it's a neat thing when you can see that visually, but then when you get the reset here, suggesting that we may have a little more strength into this setup going on at the current point. Fun to see that compression, though. That range got super narrowed, and that creates a little bit of an expansion. That's perfectly normal. It does correspond pretty decently to this 50% range that was right back here for the lows that dipped back down here. So all that from a broader multi-day thing was just, you popped up, you came back, and you keep retracing the same 50%, which is now the new zero. That's the beauty of how that resets, and it keeps staying fluid like that. So that's the long and the short of it at this particular point. More or less, I think we're probably still looking at a little more weakness here. Doesn't mean it's going to be, wretched or anything. I think you just have to expect the softness, and that's just what the readings are pointing to. We didn't get a reset, though, with this early in the month buy. I think that's worth a concern, because it indicates that there may not be a whole lot left to propel this move beyond where it is. So, worth noting, still, obviously, at these levels, as long as you stay above in the 69 range, I think the chances of getting to 2600 on the ES are still there. So, we'll just have to play it by ear and follow the readings. Trade well. We'll talk again later.